What is the difference between tax evasion, tax avoidance, and tax planning? It is important to understand the distinctions between these three legal concepts so as to undertake appropriate tax minimization strategies and limit one's exposure to challenge by the presiding tax authorities and building up the case to substantiate your business and tax minimization practices. So let's break down the basics of these three tax principles. Tax evasion involves knowingly reporting tax that is less than the tax payable under the law with an attempt to deceive by either omitting revenue, fraudulently claiming deductions, or failing to use all of the true facts of a situation. Now, this is the most egregious and thus the clearly illegal and can be prosecuted when one undertakes tax evasion. Next, we get to the aspect of tax avoidance. And tax avoidance is generally considered to arise in cases in which the taxpayer has illegally circumvented a law, resulting in the reduction or elimination of tax through a scheme or series of transactions which do not truly reflect the real facts. So in many respects, it is a misrepresentation of what is being undertaken for improper purposes so as to affect a tax result that is more beneficial to the taxpayer, and in turn challenges what the purpose of the underlying tax legislation is. We'll get back to this, but that is where the revenue authorities typically try to come down on, that they perceive it as not legitimate purposes, but conniving and crafting of transactions in a manipulative manner to achieve an improper tax purpose which is not intended. And this is tax avoidance. And this goes against the construct in the third aspect, which is tax planning, which is seen as the reduction or elimination of taxes through the clear purposes of the tax legislation and the structuring that is permissible with a legitimate, genuine, and transparent process that clearly follows the law as the law was intended. Nevertheless, this is where, once again, we come to the gray areas between tax avoidance and tax planning, given the fact that there are transactions that could very well be considered appropriate, but the challenge is to properly document them, to structure them, to undertake them in a manner that allows you to minimize tax and allows you to assert legitimately and with your professionals that this is a proper purpose and it is a conceptually correct transaction. And given that the tax authorities all too often simply attempt to use general anti-avoidance rules and other rules at their disposal when they fail to properly understand these conceptual concepts, transactions, and the like, it has the potential to run amiss and be viewed as tax avoidance and to some degrees played up as tax evasion, although that is typically not what these strategies are intended to do. Nevertheless, so much of it is interpretation, and so much is effective structuring, documentation, and conceptual arrangements and constructs that allows one to optimize their structures so as to legally minimize their taxes. And therefore, the intent and the objective is to push oneself away from tax avoidance and into tax planning, or at a minimum, to have the arguments available to you from a legal perspective to characterize and to effectively present one's transactions as that of tax planning and not that of tax avoidance. And there is a challenge, and there is the importance of understanding the differentiation between tax evasion, tax avoidance, and tax planning. Thank you.